The past few weeks have been insane. In fact, I've filmed this video 3 times and thrown it away because each and every day when I wake up, the entire playing field is rearranged. And in my view, we have until the end of Q2, or in otherwise 73 days, until we see a massive resolution that could be phenomenal or very, very bad for markets. We have 73 days to figure this out, or there could be potentially irreparable damage done to the economy. And that would definitely, at least short term, hurt our Bitcoin and crypto investments. Long term, of course, I do believe Bitcoin is going to see its way through this, regardless of the outcome. But when there's a train coming, you do not want to tie yourself to the tracks. And the entire mission of this channel over the last few months has been trying to raise cash to buy the dip, to buy the blood from that train crash if it is indeed coming. So let's get into this, because this is going to be one of the most important videos I make that outlines 2 scenarios. And depending on whether we're able to figure this out within the time limit will, in my opinion, dictate the ultimate outcome. For a little bit of a chronology, I was super bullish coming into the Trump administration, far too bullish and far too overly optimistic, not realizing that his initial first goal would be to wage a global trade war and effectively throw the investor class under the bus, something that is not truly done in the past. At the beginning of March, I flipped bearish and said, you know what? It looks like Trump actually doesn't care here, and he might actually be trying to intentionally cause a mini financial crisis that would cause the Fed to be able to step in with no fear of inflation and bail out the markets, lower interest rates, and set things on course for another period of expansion. But since then, things have gotten really crazy. And then a week or 2 ago, it seemed like there was a pivot, both out of Trump going from talking tough to talking sweet about China. The Fed said they were going to step in and stabilize markets, and all of it seemed hunky-dory until just a few days later, Trump flipped again and said not only was there no deal, but there would be no exceptions, and we actually re-raised tariffs yet again to now an almost comical 245%. Now, the good part of this is we know now the entire trade war is focused on China, and effectively Trump's goal is to isolate China and to take back some of those middle-class factory jobs that he thinks are going to power the next era of America's middle-class expansion. Now, we can talk about whether or not we think that strategy is going to be successful. Ultimately, I think from an ethos standpoint, I think it's a cool ethos to want to re-embolden the middle class. I think it's good for America. Whether or not this is the right way to do it, or whether it's even realistic that those jobs will come back to America, is a totally different topic. The question we care about here is what's happening with crypto. Now, one of the core beliefs we've had as a channel here is that if things get really, really bad, the Fed will step in and save markets. They'll save our bags, because at a certain point, things will start breaking, banks will go under, and then Joe Schmo, Joe Sixpack won't have his life savings at the bank. Big, bad problems for the United States financial sector. Now, I do believe there is risk of that happening. But as far as it happening anytime soon, we just had public statement from Powell where he was asked, will the Fed intervene if the stock market plummets? And Powell said, no, with an exclamation. This has led President Trump to actually get angry, insulting Powell publicly and saying that he's too late and wrong, and that he said Powell's termination cannot come fast enough. The only problem with this is that Powell cannot be terminated by the president. High-ranking officials at the Federal Reserve are actually protected from termination through a very specific law. This law is called Humphrey's Executor versus the United States. And in short, what happened is that President Hoover appointed and the Senate confirmed Humphrey as a commissioner of the Federal Trade Commission, or the FTC. And then later, Roosevelt, the next president, fired him. But since Humphrey died shortly after being dismissed, his executor, that's why it's Humphrey's executor, not Humphrey's, sued to recover Humphrey's lost salary. This actually led to this court case standing up, which effectively prevents high-ranking federal officials like Jerome Powell, or in this case, Humphrey, from being fired by the president. It's a separation of powers thing. And in this case, this 1933 court case is what's standing between Trump and his desire to fire Jerome Powell. As Powell emphatically stated, our independence is a matter of law. Well, guess what? Trump is now bringing before the Supreme Court that exact case, which will, if the courts allow him to, overturn that 1933 ruling and directly fire Jerome Powell. Now, you might be thinking, oh, this is great. If Trump fires Jerome Powell, then we'll get our rate cuts, we'll get our stimulus, the markets will boom upwards and onwards. But here's the thing. Right now, we're living through a period of wild uncertainty, where essentially the system that America has bullied everyone into over the last 50 years, this globalist system of using the dollar, us buying everyone else's products and us outsourcing all the labor to all these other countries so that our stock market goes bananas. Yeah, that's the system we created, that we pushed onto the entire world. That's why crypto crypto and all these things exist because of the hollowing out of the middle class that has been done systematically over the last 50 years. Well, guess what? Trump is saying it's a new deal, it's a new agreement, and we're going to change that system entirely. Markets are panicked because there's a ton of uncertainty. And believe me when I say this, firing Jerome Powell or overturning the ability to fire Jerome Powell will be seen as even more uncertainty, not certainty in and of itself. As Alex Kruger Macro here says, Trump somehow firing Powell would represent another black swan. If it happens, react fast and short swiftly. Equities and shitcoins implode, gold soars. BTC would guess down hard and then up as it progresses from pure risk to a risk safe haven hybrid. This is not something I'd trade in anticipation. When it comes to black swans, reacting fast works well. Right now, Bitcoin still trades so correlated to the stock market that the initial reaction would be to buy gold, probably to get out of everything US related. And then eventually it would become obvious that people would be jumping into Bitcoin, but that would probably be after a pretty significant drop. That is probably the moment that Bitcoin starts to actually decouple from being seen as a risk asset to being, hey, this thing also behaves a little bit like gold in times of turmoil. We haven't seen that yet. So it's important to realize that this event, if it happens, or a significant event, is possibly some of the fabric that will kind of shake and forcibly detach Bitcoin from trading just like a higher beta version of the stock market, a higher risk version of the stock market. So again, Trump firing Powell might seem like it's the answer to all of our when is the Fed going to step in questions, but it very well might not be, especially when you consider who he might replace Powell with. That's right. Apparently, the person that Trump likes to replace Powell is Kevin Warsh, and he is a major hawk that was against a lot of the policy post-Great Financial Crisis. He did not like QE. In fact, he called it reverse Robin Hood, stealing from the poor and giving it to the rich, which is quite frankly what it did. Trump likely wants to play into a strong dollar and reducing the debt. But again, this could mean something horrible for the stock market. Just listen to Warsh.
Quantitative easing is fundamentally different than cutting interest rates, and that it appears to be working through fundamentally different transmission channels. No longer credit channels and lending channels appear to be the dominant way in which it impacts the economy. It appears much more to be working itself through asset prices. Whether you think about housing stocks or financial stocks, I think that is the dominant channel. And as a first approximation, if 3/4 of our fellow citizens get 96% of their income from labor income, it strikes me we ought not be dismissive and saying, oh, everybody wins.
Reverse Robin Hood. We should be focusing on the wealth created by salaried workers. This is the talk of someone who does not want to go along with the system that we've had over the last 15 years. The entire time that Bitcoin has existed. So if we do get a firing of Jerome Powell, I think that we need to embrace the fact that risk assets could potentially be looking at a black swan. In my opinion, as crypto holders, this is absolutely not what we should be hoping for and could potentially be a massive risk environment. So let's get back to the 74 days concept, because this to me is the real crux, which is that we need to see progress within Q2. And the reason why I'm using that time clock is that that's the clock that Scott Bessent put on this. He said that he believes there would be a busy April, May, and potentially into June, meaning that he knows that if they don't have some kind of resolution, you're going to start seeing quarter after quarter of downward growth, official designations of recession put onto the stock market, put onto the economy. We might even see a wave of layoffs. And in that case, recessionary conditions would start to spill over and affect the broader economy. But I don't believe that this one will be easily fixed. And I'll tell you a little bit about why right after I show you these particular excerpts. First of all, we're hearing a lot about trade deals, but we haven't seen any inked. In fact, we've seen very few details about those trade deals. I certainly hope that there are 70 countries that are, as Trump said, kissing his ass to make this deal, because if so, then great. But if not, we do know that China has already shown some real concrete progress towards trade deals. They have a deal with Malaysia, a deal with Spain, and supposedly in talks with tons more countries. Trump and team are coming out of every meeting saying it went amazing, so much progress. But then the other countries involved, or in this case, the European Union, are saying disaster. We have no clue what the US is even asking us to do. Now, take in mind the phrasing here is a little bit more aggressive because Spencer's not a fan of Trump. But the point here is that we are not actually sure what's going on with these trade negotiations. And so we're supposed to sign 70 or so trade deals this quarter, but in the history of the United States, George W. Bush signed the most trade deals with about 4 to 5 major free trade agreements in an entire presidency. So look, I don't want to be pessimistic here. I believe that Trump is a better negotiator than probably all these other presidents, and I'm hopefully and having faith that this is going to work out and that we're going to see huge progress this quarter. But just know the numbers would lead us to believe that this is less than guaranteed. Okay. One of the other things I don't think was a hugely strategic move is doing this while we still depend so heavily on China for literally everything. China is so deeply intertwined into the US economy, it would have made more sense to go knives out against China after we had a little bit more of this onshoring process already started. But that's an aside. I think that what we're seeing here is that China's showing a pretty strong face during these negotiations. You can make the argument that their economy is weaker. It certainly is. But in the end, Trump obviously needs this to go fast and wants this to go fast because midterm elections are just 1 year away. We cannot see the market plunge endlessly into chaos because I don't think that it would be so easy to fix it. We should be very excited that Bessent is in this administration because he seems to be the voice of sanity in all of this, pulling Trump back from doing anything rash and encouraging him to understand that firing Jerome Powell would risk destabilizing financial markets. This goes back to what I was saying earlier, is that you can't just whip things around. Markets need reliability. And if our real goal is to go to Europe and Vietnam and all of our trading partners and to get them to gang up and isolate China, which it sounds like that's the goal, we'll show a little bit more evidence of that here in a second, well, it would make sense to not be trash talking everyone in the process. It would make more sense to cozy up closer to them and say, hey, look, we're going to give you guys a great deal. I understand maybe put on a tariff, pull it away as a way to show people that you're being reasonable to them, but not others. Look, I get the strat. We're talking about the European Union, Canada, some of our closest trading partners, feeling like the US has become on the opposite side of the table from them. And apparently the goal of this policy is to get on the same side of the table and put China in isolation mode. And if that's the case, it just seems like a bit of a weird strategy, a weird way to do that. Now, to calm your nerves, the betting markets still have Powell being out as less than 25% this year. So it's still overwhelmingly in favor of Powell staying. And as you can see by this dark blue line, the actual capitulation in the mainstream stock market has yet to come. In fact, we're trading at levels quite similar to 2019. So this is why Powell isn't really that worried. He's looking at these risk metrics saying, look, there's room for the stock market to fall and it won't destabilize things. Obviously, they don't want the bond market to blow up. Since then, the bond market has come down. Remember when Trump was talking all nice? Yeah, the bond market has cooled off since then. So without the bond market blowing up, Trump is going to push hard. And I think this is a great phrasing, which is Powell isn't folding and Xi isn't folding. And the market has not priced in both of these realities being true simultaneously. I would actually change that. I would say that it's not that it's not pricing in both of these realities being true. I think that the trade war is being priced in. The idea that there will be tariffs, the idea that this will impact trade, impact local commerce, that's being priced in. The idea that we will have a full-blown recession, that this will start to cause mass waves of layoffs that essentially will be causing irreparable damage here is not. So this brings us back to the thesis of this video, which is that if we get a deal done here in Q2, that we've probably seen the lows and that we're in buying territory at the lows of the range, or really anywhere here. And if we have no deal in Q2 with China, I think you got to hold on to your butts here because another train might be coming down the track. And this time it might be one of those Mad Max trains with the battering ram and all the spikes on the front, maybe even a blood boy playing the guitar. This is going to be some crazy shit. So as China apparently is readying a military base, and this is due to satellite imagery, which shows a new military operation being built, it brings us to a question of what do we do right now? Because I think the next few months are still going to be quite tricky. Or to put it in Fifi's words, 2025 will be a trader's heaven and a holder's hell. He says, bookmark this. And he actually pasted this under one of my tweets and replied with it. And I see that he actually put this on the exact inauguration, which I think was a pretty sage and accurate prediction so far. If you need any evidence of it, just look at Fartcoin. This was the fastest horse up 4x from the lows, but already it's fallen almost 20% from the high, 23% from the highs just a couple of days ago. This shows you if you have a hodler's mentality, you're probably not going to experience any kind of euphoria in these conditions. Certainly with super risky assets, that's not where a bunch of people are going to be rushing to stick their capital. No, risk is very much so under the gun right now. And the question on everybody's mind is, which regime are we coming into? And while we don't know for sure, it's a trader's market, which means it'll probably be likely to stay in the ranges or bounce off key levels than it will be to break through them and have massive trends. Of course, the biggest thing that we need to understand is that Trump has not balanced the budget, and we're still quite a ways away from that. Maybe that'll happen over his term, but certainly not this year, certainly not next year. And if things continue at this rate, well, Bitcoin is your way to avoid essentially the overspending problem that the United States faces. And quite frankly, if Trump doesn't figure out how to deliver some economic wins out of all this chaos, this self-imposed chaos, then most likely Republicans will struggle to win the next elections. That's just how it goes. If things are crashing all out, a lot of the coalition that came behind Trump because of sane economic policies will probably not stick with it. Of course, we'll see what happens here. But if the Democrat Party comes back into power, they're going to print money. Oh, they're going to print money. They might not like crypto so much, much, but they're definitely going to print money. So on its whole, Bitcoin is there, and Bitcoin will do well in the long term. Despite all of these scary shocks to the economy, Bitcoin is set to do great. And in fact, the case for Bitcoin, the use case for Bitcoin has never been clearer. Now, I do want to give Horst some props here. He called the top very emphatically right at the beginning of January. And this was when it was not popular to call the top at all. Essentially, he's saying that he thinks that we make it down to the 70s again, but he thinks it's possible that in the meantime, we actually make our way up to the mid 90s before that happens. And again, he echoes what Kruger Macro was saying, that if somehow Trump is able to boot Powell, markets will nuke. So again, Bitcoin should eventually track with global liquidity, which is growing over the next few months. But could there be some blood on the highway before that happens? Absolutely. And in fact, we should be looking, because if Bitcoin just starts breaking out up and to the right, it'll be very interesting, and it kind of simplifies our life on how Bitcoin's journey will go. It probably will just start to track global liquidity exactly. But for now, we have to understand that Bitcoin's correlation to stocks is pretty high, and that if there's a massive shock to the system with stocks, with what's happening here with global trade over the next few months, that Bitcoin will probably suffer, at least in the very short term. And that, of course, brings us to the big opportunity, which is if there's going to be a big crash, we need some cash on the side. That's why I was so adamant about selling when we broke that range initially, when we first started our journey back into the 80,000s, what feels like years ago, but it really was only a few weeks ago. I also think that very few select altcoins will do well over the mid to long term, and it's important to realize which regime they fall into. Bitcoin currently trades like a risk asset, but it also is built to be a safe haven asset, whereas a lot of altcoins fall into the risk asset bucket. So they will probably need a change of policy, at least a change of optimism about markets for them to actually pump. Right now is a horrific time for risk. So now let's talk about altcoins, because in my opinion, the shopping list for altcoins is extremely, extremely simple. And if we are going to get this massive shock, I'm going to be buying mostly Bitcoin, but I'm also going to be taking the opportunity to invest in some altcoins while they are totally out of vogue and nobody likes them. That's what I love to do, is buy when the market is so disgusted with the certain type of altcoin. And that's usually where you get this insane return, because people believe that it's not possible for them to pump again. And I don't believe that's the case, especially the ones that are completely dominant in their fields. And I'm going to simplify this. First off, we have Solana. But it's a pretty shocking statistic to see that Solana's application revenue is occupying 70% of all revenue in crypto. So for those of you who are dancing on the grave of Solana, I would say that that is far too soon, and that Solana's dominance in this ecosystem is something that you should actually be looking at as a massive gift to buy the most dominant L1 on this insane dip. And I believe that if we do get another shock to the system, if Solana gets into those double digits, that we will start seeing some really, really juicy long-term accumulation opportunities for Solana, which is obviously the dominant blockchain in this ecosystem. Next up, we have AI. And the AI coin that I think is most interesting, that we haven't talked a lot about because it's been so expensive, is actually BitTensor Tau, which has actually finally gotten so cheap that it's almost at the lows that it's ever been traded on an exchange, on a centralized exchange. This is really nice. And if we see it break here, especially if it comes down close to 100 or below, like this crazy low region here, which it might start plummeting into, I think that BitTensor Tau is one of the most interesting projects. It's just been too expensive to make a lot of money on, but long-term, I think it's going to survive. And it's actually become, in my opinion, one of the main hubs for AI development, and really AI, not just in crypto, but it actually offers the opportunity to solve some problems in AI outside of crypto. Take a step back. If you were to look back in 2040, in 2035, at right now, 2025, and this market collapse, let's assume that we keep seeing a bearish trend emerge here, or even if it goes sideways. What do you think people in the future are going to look back and wish they had bought at this moment? In my opinion, there are a few technologies that seem really obvious, but AI is the most obvious one. It's smacking you right in the face. So being able to get yourself massive AI upside in crypto and outside of crypto is probably one of the smartest and easiest ways to trade this particular regime. What's funny is if you think back to the great financial crisis in 2008, you had the entire markets crashing, the housing market crashing, financial markets going bananas, and yet you had the iPhone had just been released, and you had a bunch of nerds building apps at places like Stanford. They were creating Instagram and Snapchat and all of these apps that ended up becoming multi-billion-dollar companies. They weren't focused at all on what was happening in the old system. They were focusing on this new playing field that had just emerged. That's what I see as the moment, kind of like today with AI, where this sort of legacy system is having problems. The stock market's having problems, the bond market, even crypto. but AI is about to flourish, and this new foundation for innovation is only just getting started. As an aside, if you're not talking to ChatGPT every day, trying to get better at using it, learning the tools and how it can accelerate and make your life better, you're missing out tremendously. I highly encourage it. But anyway, BitTensor Tau is an entire ecosystem. I think that this is the big AI coin to hoard. And of course, as you guys know, I'm big on TauBot and some of these other AI ecosystem projects within BitTensor, but that's going to piggyback on the success of BitTensor. Next, I wanted to check this out because we have here, if you can see here, Hyperliquid. Again, this is an L1. Yes, it's an L1. Yes, it's in that way competing with Solana, but I think of it more as an exchange, an on-chain perps facility. And you can see here, Hyperliquid versus all exchanges. It's gone from almost nothing to a high here of 4%. You could see here, this is the amount of ground that this decentralized perps facility has gained on Bybit. It's doing 21%, almost 22% of Bybit at the peak, and almost 18, 19% of OKX. Binance, the actual behemoth, close to 10%, right? So this is not insignificant, the amount of volume that Hyperliquid is doing against these exchanges. So if you separate it out, you have your Bitcoin, you have your hard money, your hard asset bucket, you have your L1 bucket with Solana, you have your exchange and trading bucket, which in my opinion, Hyperliquid is the most investable way to get into the exchange and trading business. That is the only real open decentralized exchange project besides, maybe Coinbase stock. But again, Hyperliquid is trading at a mere fraction of what Coinbase stock is trading at. And, in theory, these open decentralized networks have potential to be bigger in some ways. And I personally don't love the Coinbase experience. So hype for exchanges and for perps. L1 is Solana, AI is Tau, your hard money is Bitcoin. And of course, for gaming, it's becoming obvious that the only coin you really need for gaming is Super. Now, again, I can't remember whether I put out a video with this or not, but please, if you're holding Super still, go stake it, navigate to the official Superverse Twitter, and there is official links to the Superverse website where there are options, where there are very clear directions on how to stake. Look, I'm not going to say this again. This is your opportunity. I've said it on Twitter. I'm giving you plenty of time here. I don't want you to miss out on something. So anyway, I'm going to say this once. If you're still holding Super, please stake it. And finally, RWA, of course, my RWA play is Ondo. But in late February, I actually talked about how I wasn't buying Ohm. I had showed the chart a few times, but I wanted to confirm here that in February, I made it clear I thought there was something going on with the chart. It's just the way it never came down after hundreds of X's. It seemed weird. And then I heard rumors that there was some kind of supply control that they were doing. It turns out, of course, that was accurate. There were some weird supply issues. But anyway, this is why I didn't want to get into Ohm. If you guys remember, obviously, I put out a warning, I think it was late February, in one of those videos that I was staying away from Ohm. And of course, we saw the Ohm price collapse as recently as a few days ago. So just wanted to touch back. So that's it. Those are the coins that I'm focused on buying, but mostly Bitcoin right now, because Bitcoin, I think, is going to have its real moment to finally break away from being a risk asset through all this chaos. But let's bring this home. I think we have to have a trade deal here in Q2. Markets are really scared. And the problem is that as much as it's doing damage here in the United States, it's doing massive amounts of damage overseas. In the EU, in Canada, most Canadians, I heard a statistic that half or more Canadians are worried about layoffs or losing their job in response to tariffs. You have people all around the world that are viscerally angry and very fearful about what's happening with Trump. And in my opinion, if Trump does cause a global recession with this tariff palooza, it's not going to be something where Humpty Dumpty can just easily be put back together again. These countries will be slow to trust the United States again, and the current system of trade, of global finance, will be in flux for the first time in our lifetimes. And my friends, that might be very good for Bitcoin. It might be. It might also be an incredibly challenging and weird period. So I believe that the best thing we can hope for is trade deals that are swift, successful, and plentiful, and that we see them before the end of Q2. Or I fear that what Ray Dalio's talking about might actually come to fruition.
Right now, we are at a decision-making point and very close to a recession. And I'm worried about something worse than a recession if this isn't handled well.
Something worse than a recession. You tell me, you can fill in the blank. I'm not here to fearmonger. I'm just here to tell you the truth, that I think that if we do see trade deals, that we're probably in a good position to be buying the heck out of the lows. And if not, even though I was slow to react at the top, those sells that we made when Solana was $200, when Bitcoin was over $93,000, when the market was still in that reactionary moment from having broken 90,000, it'll be time to take a very humble and new look at this entire market. That said, I'm very optimistic that throughout all this, throughout the chaos, There will be insane opportunities to buy assets that are being wildly mispriced and to figure out together the most profitable way to navigate the next regime of the global economy. I'll be here with you each and every step of the way, and I'll do my best to keep producing even more long-form content. It's just been really hard to have a thesis and stick with it when each and every day the information is changing. As always, if you appreciate these videos, please smash that like button. It really helps the YouTube algorithm, and I'll see you very soon on the next episode.